someone who would decode for us the demonetization impact as well. Rakesh Biyani, General Manager Director of Future Retail, joins us. Rakesh, good morning. Thank you very much for finding time for us. Well, before I move to the budget, first your take, have demonetization blues ended? Can you make some distinction between the mid-tier cities, the tier 1 cities, and tell us what the impact has been and where it is wearing out?
So, I think for us, as we had also stated earlier, demonetization has not really had any impact on the sales at our stores. Other than the initial week, I think the business has continued to grow quite well. In fact, we've been reporting good like-for-like sales growth across the country. Clearly, the growth for us in smaller towns has been much higher as compared to maybe the metro cities. But as time has gone by, things seems to be normalizing. The share of cash within the sales has also increased, but it's not going to be ever back to the level that it was there in the past. But I think overall business looks to be quite good. So I would not say there's been no impact to us as far as demonetization goes.
Okay, Rakesh, good morning. Can you quantify in terms of monthly run rate, maybe where we are right now in terms of business compared to where we were, say, in September, October?
So, on categories which are really comparable on that level, which would be categories which are daily consumption categories, the business has actually kind of grown on an exceed of about close to 18 to 20% kind of levels on a run rate level on a month-on-month basis. So I would say that some of it is, of course, because there's clearly been a shift towards the organized retail as new forms of payments were completely always acceptable at our stores. So there has been a consolidation of business within our space. Our supply chain, which is already very evolved, was not disrupted because of the demonetization process. So that's also continued quite well. And the availability factor is something that we've been working quite hard on, and that's again helped us. So in other categories, specifically even in a clothing kind of a business and other fashion categories like home and homeware, the business has been quite strong. More driven by the assortment strategy also, and we are quite sharp on our pricing, so that's also helped us.
Okay, Rakesh, good morning. In fact, pre-demonetization, your growth in the future lifestyle business, especially in licensed brands, was very strong, about 30% or so for Q2. Even your own brands have been growing at about 10%. Post demonetization, what kind of growth do you envision in the lifestyle business between licensed as well as your own brands?
So in the future lifestyle business also, the growth has been quite strong. The numbers have been quite good. Yes, there's been some impact due to the fact that the promotion window has started a bit early this year as compared to in the past. But overall, our own brand business has worked very well for us. That's something which has been a big focus area for us, and the impact there has been quite strong. And I would say that we continue to maintain the trend that we were showing in the earlier part of the year.
In fact, you were pushing in margin expansion as well when we spoke to you last because of how your own brands are growing. Is that helping in terms of further margin accretion, and is that what we should expect over the next 2 quarters?
Clearly, it's always clear the fact that when you do your own brand business, the margin model is always more healthier, and as the share of that category keeps increasing, there will be a margin expansion in the business. And I think there is a lot of scope still to expand the margin, and we are working not only within our own brands but with our brand partners in terms of how to bring in more product differentiation, how to work more closely on the supply chain side, so that there can be a larger increase in the full price window, which I think there is a lot more scope that one can do over the next 12 to 18 months.
Okay, well, now to the budget, Kishore. Any specific expectations from the budget, and particularly there has been a lot of talk on the policy to promote mini food parks. Any thoughts on either both budget and mini food parks policy?
I think if you ask me, is that if one thing that is required to be done, in wake of demonetization, in wake of the government's intent to increase its tax base, I would say that two things have to be thought through by the government. One is about how do you simplify this entire retail trade policy. I think it's just too complex today. And the way it is structured is just nowhere in the world it works like this. And the more we come in with different definitions or circulars, it is just adding to the confusion. So I think simplification of distribution, which is what retail really does, would actually help in the long run to achieve government's long-term objective of controlling inflation, improving the supply chain efficiencies, etc. So I think that's the first, I would say. Second, to follow through is very clearly the fact that I think there has to be a long-term roadmap in terms of where do we believe our indirect tax rate should be. Is it 12%? Is it 18%? Is it 16%? Yes, the GST is defining something, but as we try to increase the tax base, clearly there needs to be a merit to sort of reduce the tax, which will ultimately increase the compliance level, bring the prices down, drive more consumption. And I think these two roadmaps would be something that one should look forward in a budget, which kind of defines how the future is going to roll out as we get ready for a GST later this year.
So would GST be disruptive for you, or will it make you change your sourcing rather drastically? And secondly, would that ease, the complications that you are talking about?
So I think what GST does is definitely allows you to rethink how you do business. And it can bring in a lot more efficiency, considering the fact that the borders disappear, and it allows free movement of goods with the tax credit flowing with the goods, which is quite different from what is happening today. And it can allow not only in terms of increasing the availability and assortment availability across the country, but it can also bring down the prices. I think as the industry is getting ready with GST, it will take about a year or so before the industry starts realizing the kind of changes that needs to be done. At Future Group level, I think we've kind of recognized the importance of GST and how it can impact our business model. And we have already been investing for the last few years into upgrading our supply chain by creating more larger and consolidated distribution centers. So we're quite ready for the way GST is proposed to come into India. And I think it can change a lot of things. Right? As long as the whole process is quite simple, which will ultimately come out of when the final bill comes in. I just hope the fact that the implementation process is as simple as what it is supposed to be.
Okay, Rakesh. Yeah, thanks a lot for joining us and giving us your feedback on what